and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson at the beginning of the show, I do want to spend a few minutes talking about Fibonacci retracements. I studied W.D. Gann for about 5 years and noticed that he spent a decent amount of time talking about different retracements. And I learned a decent amount from that and started to apply it to certain things that I look at and noticed there was some overlap. So I want to spend a few minutes discussing that. And then we're going to spend the bulk of the show talking about the individual stocks that came through. But let's go ahead and get into the agenda. So yeah, I want to talk about Fibonacci retracements. And one of the things I like about them is because the moving averages are changing every day. I like the idea of having a price zone that I know in advance of an area of potential support that could be taking place. And so I'm going to show you how I go about doing that. And then I also want to look for confluence. And I'll give you a couple of examples of how I go about doing that. Looking for areas that make the pullback even that much stronger or increase the confidence level a little bit more. And then also, I think there's ways where you can be a little bit more on the aggressive end of the spectrum if you're interested in doing that. I'm not saying you have to, but if you have a fast market, I'll tend to use the Fibonacci levels a little bit more than I will the other indicators because when a market is moving quickly and there's a lot of volatility, the indicators lag a little bit, and yet price and the Fib levels can be very, very accurate during times like that. So I like to use those if I want to be a little bit more on the aggressive end. And then we're going to spend the rest of the time going through the individual stocks that came through. My services can be found at rabilstockresearch.com. I have been providing consulting work to institutional money managers, big portfolio managers for the past 30 years. But recently, over the last year or two, I've changed the structure of my pricing, and it has allowed me to work with more professionals at a lower rate. So if you're interested in potentially doing that, go ahead and reach out. You can call me or email me and let me know. Also, if you're interested in the individual package, I send out about 2 to 3 reports each week talking about individual stocks, trying to generate ideas, as well as look at the market and individual sectors. If you want to do that, you can use the coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the lesson here. I have the weekly chart of Microsoft up, and Microsoft is a great chart, a great stock to use as an example. In almost every technical aspect, it has been such an incredible trend. It tends to give interesting patterns, a lot of examples. I can use it in almost every one of my indicators, but because it just repeats and repeats, it definitely follows the tenets of technical analysis very closely. So I've got this chart up. Now what I've done, instead of using multiple time frames, I've got my 18 and my 40-week moving averages up here. But what I did was, instead of showing a monthly chart, I have just overlaid the 18-month moving average, this green line. And it's pretty amazing when you look at this. Look at the pullbacks that took place over the course of the past few years. And look at how it has respected this 18-month during those pullbacks. Now, if you notice what's taken place, we had some pretty sharp moves, a move down, and then it basically turned on a dime. This was clearly a V-bottom reversal. And so, what I like to do at times like this is get a better idea using this Fibonacci retracement tool. So what I'm going to do is I'm going to start from this low, and I'm going to work my way up to the high of this move here. So from this low to this peak, and then we get a retracement. Now, one of the things I'll mention is the zone that I'm looking at is between the 382 here and the 618. So this is really the area that I'm looking at when I'm using this tool. Okay, this is the zone where the majority of pullbacks are going to fall inside of. Now, most of the time, you're going to hold the 50% retracement. I mean, I would say if you're in a good uptrend and you take an important low, rally up, and then pull back. It's almost always going to hold the 50% retracement if it's going to keep going. But I have seen in deep market sell-offs like this, it can come back to the 618 and still be considered in an uptrend. So we don't always expect, if it breaks the 50% retracement, it does not always mean we're rolling over, the trend is breaking. But in most cases, we're going to either hold the 382 or the 50%. So in a lot of ways, when I'm looking at a pullback, I'm usually zeroing in on this zone right in here. Now, sometimes it'll just come right to the 38% retracement, and other times it'll just come right to the 50% retracement. But a lot of times it's just somewhere in the middle. So we have that pullback, and it gives us some insight. But notice the confluence that's taken place. Not only do I have the 50% retracement level here, okay, I've got the 18-month moving average right at the exact same level. And then the other thing I can do is I can look at this price area. If we look at where that was, this acted as an area of resistance, and then it acted as an area of support before it took off. So that's a pretty good support zone. So now I have three areas all pointing to the same spot that have, that's a confluence of support. I've got 18-month support, I've got price support, and I've got Fibonacci support. So as I look at this, I try and find where the moving averages are and see if there's a fib level there. And if you notice on the way down here, this really wasn't, the 18 really wasn't coinciding with a fib level. It was probably a little too sharp of a decline in the way that it played out. But we can keep doing this, and let's go ahead and delete this and then do another fib level. So now I'm going to start from this low, and then I'm going to work up to the next peak. And if we can see what happened, we had the move up, and then we pulled back, and we found support right at the 38% retracement, which happened to also be right in the area of a rising 18 week. Okay, it didn't quite make it to the price support, but we had two areas of support. And once this started to pull back, I would have had this fib zone put up, and then I would have known where is that 38% retracement, and it gives me an idea of what to expect. So the fact that this held the 18 and stayed above the 38% retracement actually makes sense to me, because if it would have come down to the 50% retracement, it would have broken the 18. So I like to use those together that way. Now we can go again, and you can use it in a number of different ways. I can do this again. I can keep moving this higher, and as long as the retracement holds above the 61%, 62% retracement, I know that we're still in an uptrend. In most cases, again, this pulled back right around the zone between the 38% retracement and the 50% retracement. So it almost hit the 50%, but if you notice, it hit the 18 on the nose. So now I know, and again, once this process started to pull back, I'm throwing the fib grid up. Now, if you want to use this last low, you can do that too. You can put that up. And in fact, what I like to do is put them both up and see if there's confluence at a specific area. Where do the lines line up? And they give you the stronger support levels to be on the lookout for. These two lines together were showing you right around that 18 was pretty strong level to be on the lookout for. So something to use, something to be, I think can be a big advantage for you. And then one other thing I want to show is that if we've got a pullback, and let's say we're looking at a retracement level coming back to here. I'm not going to do that right now, but let's just say, let me zero in on this. Let's just say we're coming into a pullback area, and this happens to be the 38% retracement. And you notice how the trend is down right now. Well, if I want to be aggressive, I know that I've got the 18-month and I've got a fib level right here. I can buy the reversal bar. I don't have to wait for one of my signals like a zero line reversal or a trend line break or ADX or anything like that. I can know in a fast market, I want to be focused on the fib levels and the moving averages because they don't have as much lag. And I can play the price bar reversal in a fast market that's coming down to a deep oversold reading, but also finding price support and the fib level and be a little bit more aggressive in my entry. So it's another way to look at a trigger being a little bit more aggressive. So hopefully that makes sense, but let's go ahead and start looking at some individual stocks and doing some analysis. Okay, so before we get going, I just want to make sure I repeat and we keep focusing on these four conditions, four things we want to be watching on every single time frame. So I've got the monthly and the weekly and the daily, and on each one of these time frames we want to look at the trend. I use price for that. I use the moving averages for that. For momentum, I'm mostly focused on MACD and ADX, but we can still use price and the moving averages as well as volume and relative strength as well. I mean, all those can play a role, but typically when I'm looking at the momentum, I am focused on the MACD and the ADX. And for longevity, for each time frame, you want to see how long the trend has been in place and how many signals have been in place since the last real correction or breakdown. And so that can be pretty helpful if a stock has made a pretty big move and has not really had any kind of a pullback or anything like that for a while. And then overbought, oversold just shows you you want to be looking at how far away you are from mainly the 18 MA in each time frame, and it could be to the downside or it could be to the upside, but can be really helpful when we start to do that in 3 or 4 time frames. You can really start to zero in on what is really taking place. So that's what we want to do for each stock. So let's start with this Matson MATX. Stock on the monthly chart has made a pretty big move since this breakout around 40. We had one pullback and then we've made another move, and now we've reached this big round number. And notice what's starting to take place here. So MACD did not confirm this last new high. We had sort of a harsh sell-off after this breakout, and it just looks tired. And I would not be surprised, just based on the way this has played out and how far it's gone and the fact that we're hitting a big round number, that we could be heading back to support down at a minimum, I would think 85, and very possibly back towards the low 80s, maybe even $80. For ARKK, so this is one of the ARK funds, this really just shows that there's a pretty harsh decline taking place, and it hasn't really reached its support level yet. The momentum is still pretty negative. We've got ADX pretty strong here on the weekly chart as this drops down. So I don't know that I would be looking to dive in on a big drop at this point. I'd probably like to see it stabilize and or come down to bigger support from this last breakout area. So right now we have this little air pocket where you can see where it just took off, and there's just no intermittent price support as it's pulling back. So it doesn't mean that it has to drop all the way back down to here, but we want to see some signs of stabilization if it is going to turn. Cisco has come down in a pretty harsh fashion as well. I mean, we tried to break out through this 60 level, and it just failed pretty harshly. Notice the ADX on the daily chart. So we can see this breakout around 60, and then look at how it came back down through, and look at what the ADX did. So we had a decent buy level of strength based on the green here. Look at this ADX reading. But then look at the counteracting selling strength, and it was actually stronger than the buying strength. This tells me you don't need to be in any hurry. We're going to need to work off these sellers a little bit, and we're actually going to need to see the green start to show improvement. The buyers are going to need to show improvement here before we're going to really turn this thing around again. So just looking at that, I really wouldn't have that much interest in buying this right now. Now, at the same time, I don't think there's a significant amount of downside risk to it. There's probably pretty decent support around 52, 53. Halliburton had a really nice breakout move. The breakout occurred probably, high 20s, maybe 30, something like that, and we've had really nice follow through. Let's focus in on the weekly chart here. Nice breakout. Look at the MACD reversing at the 0 line, and then we had a low ADX condition that's now moving to the upside, has moved up to 28, but is rising really well and good price volume action, strong price bars and good volume. I could see this stock, now that it's worked its way through this 30 area, I would say 40 is probably the target for it. Now, I expect some kind of a pause or a pullback before we reach 40, but based on the momentum conditions and everything, this looks like it's in pretty good shape. So yeah, I think getting back through these lows on the monthly chart through 30 is a pretty good sign for this. USB has it reached the breakout area and then paused, and it's just been working sideways. Now, this last pullback was pretty harsh with the gap down and everything, so I would probably like to see this overcome 62.5 again before I would really be looking to be a buyer. But the position of the MACD is pretty good here. This was really overbought when you look at this back in this period when it first reached this area. And it's worked off, the price has worked off sideways, but the MACD has worked its way back down to the zero line. So we have somewhat of a reverse divergence and a zero line reversal developing. But again, because of the way this gap down from that area, I think I'd be looking for this to get back up through 62.5 or something like that before I'd be interested. JPMorgan bounced off the 18-month line. So we had a nice breakout and there was a lot of support under 150, and it came down and basically clicked back down to where price support was and the rising 18-month line. So overall, this is still okay. The problem I've got with this in the short term is the harsh selling that took place created a little red DI, and I think we're just going to form a channel in the near term. I just don't see this getting back up through this 18-week and 40-week right away, on the first try. I could see this consolidating probably between 150, 155, 160, something like that. Just kind of channeling sideways a little bit. But the overall longer-term pattern, I think, is still in pretty good shape. Baker Hughes is starting to move higher here. I do like this pattern. I don't think it's quite as strong as Halliburton. If we look at Halliburton, it's really moved up pretty significantly here. But that doesn't mean this can't keep moving higher. We probably have resistance in the mid-30s, so there is some room to trade this to the upside. The one thing that's bugging me a little bit is green is above red, but green is not above 25. So there's not, the strength of the buyers really isn't all that enticing. And I'd probably be a little bit more interested in buying Halliburton on a pullback than I would be playing this, but it's not to say that this isn't going to participate. I still expect that to take place. It just seems like it's lagging a little bit. So Fox is starting to look pretty interesting to me. The monthly chart. So really, we don't, from this point on, we should just look at the new price action and kind of ignore what's taken place before here. But we do have a pretty attractive pattern holding the 18-month little pinch play that has started to kick in. But the weekly is really where I want to focus. Look at the MACD cupping and it double bottom at the zero line. And we had low ADX showing the sellers really weren't that strong. And now we're coming up through this 40 area. So overall, this pattern looks pretty interesting. Because we're a little overbought on the daily chart, you might want to look for some kind of a pullback. But I like this overall pattern. Enbridge is looking pretty attractive here. We have this big turn developing on the monthly chart. This stock went through a declining phase and then found a lot of support at 30 and has worked up, and now we're above the key moving averages. We've got MACD improving. Green DI is starting to break out above 25, and MACD on the weekly chart is respecting the zero line. So I've been sort of waiting for this to break out. It might break out and then we could get a pullback, or you could buy in anticipation of the breakout just based on how big a base has formed on the monthly chart. But overall, this does look pretty good. Okay, so Apple is in a strong uptrend. The monthly chart has confirming MACD and ADX behind it. The one thing about this is it's got a longevity problem. This has been trending for a very, very long time. It's been a long time actually since the price has just come back down and touched the 18-month line. So we want to keep that in mind. We do have a little bit of pullback risk in the longer term time frame, but on the weekly, we're still respecting the 18. Every time we pull back, we seem to be finding support, and had a nice pullback recently, strong ADX condition, and it was a bit of a V-bottom like a lot of the market, but came back through the key moving averages. I think there's pretty good support at the 18-day here. So, I mean, that's probably the way I would play it. I would definitely play this more as a trading move as opposed to buying this and putting it away. Just based on the fact that we haven't had a pullback towards the 18-month line. So this is more of a trade off the weekly and the daily, but I think it could be done. You have to use tighter targets. You have to use tighter stops. Okay, had another request for Facebook post decline. I know a lot of people are probably looking to try and play this as a reversion trade back up towards the moving averages because it's so oversold. I mean, it could be done. I just think the violence to the downside and the fact, this is what bugs me about this more than anything, is we had the gap down. In today's day and age, usually everybody gets the news at the same time. We get these big gap downs, and that ends up being, when you have this big of a drop, a lot of times that ends up being the low of the move. But look at what happened. We went to new lows the following 3 days. So not only did we sell off and have a monster sell off that day, we also had follow through the next 3 days. Just tells me that people really want out of this thing, at least for now. Now we are getting a little bit of a bounce off this big support area. And yeah, it's possible this could lead to a move maybe up towards 250, but I just don't see the evidence here that I'd want to play this. Now, if you go down to the hourly chart, yeah, you probably could find a little bit of a trading play. Again, maybe for a move back up towards 250 or something like that, but just be careful here. I don't see the evidence that suggests that you should go diving back in. And I don't really see even evidence from a trading move standpoint. Look at the ADX on the daily chart. Look at the strength of the ADX and the negative DI on the weekly chart. So other than being oversold, I don't really see anything all that attractive right now. But just the fact that it's oversold, probably going to get some kind of a little bit of a bounce. Okay, so Freeport is developing here. We had this big move on the monthly chart. We worked off the overbought condition, tried to get going, and now if we look at the weekly, we've made a strong move and consolidated, and it keeps trying to get going, but it hasn't been able to really fire on all cylinders and get this ADX green DI to cross above 25 and hold 25. So that's really what's going to cause the next leg. If we can get this green DI to break out above 25, it's at 26 now. I'd probably like to see it a little bit more, maybe get up to 30 or something like that. I think that would be better evidence that this whole consolidation pattern is maybe going to lead to the next breakout level. And I do think that's coming. I just think it might be a little bit on the early side. Overall, the pattern looks good. I think if you're patient in this, you should get paid in this. Let's look at Boyd Gaming. So this is another really interesting pattern. Starting with the monthly chart, powerful move to the upside, confirming MACD. MACD hit a new high with price, and ADX made them peak above 30, above 25, and then is during this consolidation pattern held above 25. I really like to see that as well. So that's the bigger picture. And then we start to focus in on the smaller time frames. Weekly, as an interim starting point, look at this, making a higher bottom in price and a lower bottom in MACD, a nice reverse divergence taking place. So I find that to be pretty attractive, and especially when you're going through this consolidation phase, I like to see low ADX taking place. So I find that to be pretty good. Now, on the shorter term time frame, we're getting a little overbought. So I'd watch for the next pullback, but this has a really good qualities to it, and I think definitely worth watching. Interpublic Group, A lot of volatility here recently. Now that might give me pause in the near term. The bigger picture pattern looks pretty good. Strong move on the ADX and then on the monthly ADX and the MACD. And we're trying to pause, but I just don't like all the volatility in the near term. I think there's pretty good support here in the low 30s though. I just now expect more sideways consolidation before this is ready to break out through 40. Okay, well, we've run out of time. Thanks for joining me. Please feel free to reach out. Send your stock requests to stocktalk@stockcharts.com. And have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.